All right, let's talk about the $1 million portfolio. As the market closed today, it's about 2:30 on the West Coast, so market's been closed for about an hour and a half. The portfolio is sitting right under 1.1 million, as you can see. This is about 7% down from last month, which was another 7% down from the previous month. So in 2 months alone, I went down some 14%, pretty much wiping out all my gains for the year. There's a couple of reasons for this. Probably the primary one is that I'm messing with my portfolio allocation. I was in cash for many months of the year, and then I moved into long-term bonds, which has gotten a beating in the last couple of months, to be honest. And it has not done any better since the re-election of Donald Trump. And I'll get into some of the reasons, but that's primarily why. So the lesson here is if you have a plan, even with suboptimal, it's best to stick with it and stay the course, as Jack Bogle would say, rather than mess around with it. And that's what I did, and I'm paying the price. So full disclosure here, this is all my fault. I still think that in the long run, we do have inflation coming under control, barring any craziness from the incoming administration, and I'll get into that a little bit as well. But I honestly do think that. So I think that long duration bonds are the right play. The market obviously does not agree and is going the other way, and that's what we're looking at right now. So why is the market thinking that, whereas equities have just gone on a tear since Trump's reelection? Well, the main reason is that they think inflation is going to go up, and they have a good case for making that argument. I fully admit it. And I think that a lot of people that are voting for Donald Trump because of the economy and hoping that, inflation and prices and the cost of living would be brought under control may be in for a huge disappointment. They say the election have consequences, and I'm not sure that everybody thought through what this would actually mean. I think they were just mad at the current administration, and they blame, Biden and his administration for what has happened, rightly or wrongly, and they wanted something different. But it's one of those things where the grass may not be greener on the other side. So why does the market think that inflation may go back up under Trump, especially if he reenacts, all of his policy that he's talking about? Well, many reasons, and they all have to do with giving more money back to consumers, and then consumers spending it, which will cause prices to go higher. That's just the way things work. We saw it during the pandemic when the government, gave people a lot of money to help stabilize the economy. And of course, people that went out and they spent that money. And when you have more demand than there's supply, prices go up. That's just the nature of it. So the question becomes, which of Donald Trump's policies are inflationary? Well, many of them that you talked about on the campaign trails are actually inflationary if you think about it. In other words, they will lead to higher prices if they are enacted. That's not to say that all of this will happen. It could be just campaign rhetoric. But if they do happen, we are in a core world of hurt, and me included with that bunch if I stick with this. And my intention is to stick with it. I'm not going to touch things until I rebalance, but it is what it is. Before we go on, though, let's talk about what the allocation is supposed to be and how it would have done if I just left well enough alone. So at its core, the allocation is 50% to large cap growth using the QQQ, the Nasdaq 100, 25% in long-term bonds in TLT, 15% in either a REIT, Realty Income, or large cap value, which is the Schwab dividend, and then 10% in gold. That's the basic allocation. I do tweak it a little bit by adding some leverage to the large cap growth by introducing the TQQQ and then a little bit of leverage on the long-term treasury by using TNF. But at its core, it's just a for ETF allocation. If I had stuck with that year to date, the basic 4-core allocation would have returned about 18.5%. Not too shabby. If you were to stick with the slightly leveraged allocation, you would have got 21.5%. So that's what would have happened. I got about zero. So there you go. For messing around and overweighting a long duration bonds at the wrong time. So that's what's supposed to happen. Now, why are Trump's policies, if they're enacted, why would they be inflationary? So the one thing that he's talked about throughout the campaign is instituting an across-the-board tariff of like 20%. And he insists that it will not raise prices and that China and the other countries that are importing goods into the country would be the ones pay. That's not how economics work. If you think about it at its core, if you're running a shop and you're buying goods to sell and you require a certain profit margin to stay in business, if the cost of what you're buying to resell goes up, you're not keeping your prices the same. I don't care what anybody says. You just have to put yourself into the shoes of that shop owner. If you were buying something at $10 and you're selling it for $12 to make a 20% profit, if all of a sudden the cost of that good goes from 10 to 12, you're not keeping your retail price at 12. You're going to increase it for your consumer and make your profit because you need that profit to survive as a business, right? And that just means that tariffs will increase prices to consumers, and that's inflationary. The other thing is immigration policies with Trump and the Republican Party. You can debate whether we need to strengthen our borders, make it tougher to immigrate, all of that, and there are valid arguments on both sides of that. But if you deport a large number of low-wage workers, prices are going to go up, and the reason for that should be pretty straightforward. When you have people who are working for lower wages, it means that the cost of a service or a good that is partly contributed by that labor remains low. If you take that low cost source of labor out of the equation, and now there are other people doing it at a higher price, then the end result is that that cost of goods or that service is going to get more expensive and the price will get passed on to consumers. So again, that's inflationary. And then the third thing that is a huge one are all these tax cuts that are talking about, whether that's no income tax on Social Security or tips, sounds great. Everybody wants to pay less taxes. Or the extension of Trump's first round of tax cuts with perhaps more benefits. All that sounds great, but that needs to be, again, it's inflationary, because what would happen is that if we all pay less taxes across the board, we're all going to have more money in our pockets. And if there's one thing I know about Americans, they're not saving and investing it. If they have more money in their pocket, they're going to go out and spend it. So, more demand for goods and services, that's going to drive prices up. So those are the big three policy items that if they are enacted and carried through like promised, would cause massive inflation and add tremendously to the national debt. And there's no way about it. If you sit back and just divorce yourself from the politics and the personality and all of that, and just think through logically what would happen that each of these separate policy events, if they were to happen, you'll realize that it's going to be inflationary. And that's going to be a bad thing for all of us. The good news is that we don't yet know what's going to happen. I think that a lot of this is campaign rhetoric, and that, when push comes to shove, cooler heads are going to prevail because no one wants to cause inflation, because that, let's face it, inflation was what caused Biden and Harris to be kicked out of office, and no one would want a repeat of that. So I do think that cooler heads would prevail, but we'll see, right? So my takeaway is that there's a lot of concern and worries right now in the market that inflation may rear its ugly head again, which would then cause interest rates to rise, which would cause the prices of bonds, especially long duration bonds, to go down. And that's what we're seeing. So the market is a forward-looking mechanism. Everything that you see in the market either reflects, optimism for what's going to come in the future, or it's reflecting pessimism for, negative forces. And for equities, markets thinking that GOP and Trump's policies is going to be a net gain. But in the bonds market, which is much bigger than equity market, they think that inflation is a big danger. And that's why you see yields going up and prices going down. And I can tell you that, if push comes to shove, the bond market will affect the stock market. Because if yields go up on bonds, which are, government bonds are the safest stake in investing, the markets are computing for the same dollars, right? So if you can get a higher yield, call it 5, 6, 7%, whatever it is, on bonds, stock market better return more than that to make it worthwhile. And if it isn't, people are going to pull money out of the stock market and go invest in bonds. That's just how it's gonna be and how it's going to play out. So even though we're seeing this optimism in the equities market for now, things can quickly turn. But all of this is just prognostication, right? No one knows what's going to happen. The market is reacting the way the market reacts because programs and traders and whatnot are thinking that this will be the case. But the real answer is that no one knows. Trump is not going to take office for another 2 months. And even then, things have to go through Congress. And you think that, he could do things quickly. But if experience is any indicator, things will move a lot slower than maybe he would like, which I think would be a good thing, because if he does do what he claims, we're going to be in a world of hurt. So hopefully, when you actually, when the rubber meets the road, some of this is going to be rolled back and it won't be as bad as people are thinking. At least that's what I'm hoping. But that's what's happening in my portfolio and why I'm taking this huge hit right now. That's also why you're seeing, some of the equities go up dramatically after the election. But again, it's too early to tell. We actually have to react to real policy when it's enacted. Right now, everybody's guessed. In any case, thanks for checking in, and I'll see you on next month's video. I hope you have a great Thanksgiving and a good heading into Christmas, holiday, and all that. Last more than a half of the year is going to go super quick. I'll see you on the next one, where